Good afternoon. This is Rich Nelson with Allendale covering their wrap-up comments here. Today's Wednesday, January 4th of 2012 here. Of course, we do have some outside influence we must speak of here. Certainly the U.S. dollar being up 50 here. Nice rebound and more or less taking away the losses from yesterday. With this higher crude, a higher U.S. dollar, we will point out that commodities as a whole are not seeing a major selling day here. Crude up 25 cents and gold up 13. And, of course, we know about the grains here today. Kind of mixed here at worst. As far as the corn, it was unchanged, 658.5. We will point out that corn on the March contract did not enter or touch that gap yet. That was left from yesterday morning, and that gap runs from 648.5 to 653. Keep in mind, gaps can sometimes be used as more magnets to draw prices down, but it's very important to watch what happens after a gap is filled. In other words, after filling a gap, does it move lower or move higher? That's usually a strong indication for the next move after that here. For soybeans, up 2.5 cents here. They did touch into their gap. That gap from yesterday was from 12.15 to 12.15 3/4 up to 12.23 1/4. So soybeans were able to fill some of that gap here today before rebounding a little bit here, closing up 2.5 cents. Wheat, not much support on the wheat here today, down 7 cents. We will also point out that it was able to fill that gap and close below that level. So that's not positive here for wheat at least. As far as news, we're also looking at Argentina being really the main grain-related news we can speak of right now. One thing we had talked about in our commentary for the past few nights and also in Monday's meeting with the brokers was Allendale has a view that Argentina's corn production will be lowered eventually from 29 million tons down to 20. I believe we're at 24 for our current number. We see that R.J. O'Brien has also done a similar move. They actually suggest a move down anywhere from 24 down to 22 million ton reduction could be seen for this Argentine crop. So that's certainly another little slightly positive factor. We also see the RJO number for soybeans down 3 million tons from USDA. That puts them right with Allendale's number at that 48 million ton number. As far as midday models, midday weather updates here, Drew did let us know that the Monday through Wednesday system, he's going to add a little bit, or I should say the GFS model, indicated the potential for a little more rain between Monday and Wednesday. We will point out that was mainly for the southern areas, not where they grow corn. He did point out that the next chance after that comes January 11th through 12th, and for that run, he did say that the central areas where they grow corn and soybeans may see a little extra rain more than the midday updates or morning updates. He won't change his official viewpoint here yet, certainly not based on midday models, but it is interesting to see that the market did not take the news very, really didn't move too much after it got the news here, so it didn't have too much of a problem with that. Net message is still positive for Argentine corn and soybean influence on prices here. For livestock, cattle up 7 cents. We'll point out we've got this seasonal move we've talked about. Seasonally, this is a very strong time of year, I should say, the beginning of a very strong time of year here. And right now we're still sitting in neutral, so to speak. Up 7 on the futures. Midday beef report was mixed. Actually, mixed may be very slightly positive for the net result. And we have some more discussion here in the office. One thing Ryan and I discussed this morning was weights. What type of influence will this very mild winter have on weights? Will we see that seasonal decline in steer and heifer weights here? So that's maybe one reason why we haven't seen this cattle get up and go here just yet as well. So we also have that potential issue we've got to talk about here. As far as bids and asks, we do have some locations in Oklahoma saying 119 bids versus asking prices of 124 to 125. Last week's trade is 121 and 122. So essentially looks like these guys might accept maybe $1 lower, but it looks like they're banking right now on steady money is their guess for right now. As far as hogs, down 35 cents today on that February contract. Not a whole lot of news to speak of. We will point out yesterday showed gains for cash hogs and cash pork. Today, cash hogs maybe more or less mixed, so we do have futures kind of treading water. One thing we will talk about, we've noted on the report many times here, is pay attention to the seasonal trend for cash hog prices and for lean hog futures as well. from now until summer. Pay very close attention to that seasonal trend here. As far as here in the office, some of our bigger picture issues we're talking about here, we're looking at Bill's presentation here in the office for this corn presentation. And, of course, this is the one he's going to give on January 20th and 21st. Looks like some very exciting stuff to speak of, and certainly hope that you guys get a chance to take a look at it when you sign up for Allendale's conference, and that's January 20th and 21st, by giving us a call here, 1-800-262-7538. Like I said, we got a nice sneak preview of Bill's corn presentation already in the office here, so pretty interesting and pretty neat to say here. So if you have any questions about this, getting signed up for the conference or research, or marketing in general, questions like what should be asking or what should be doing with cash corn right now, all these answers can be all these questions can be answered by giving us a call, 1-800-262-7538. Thank you.